Welcome, ladies and gentlemen, to Precious Metal Summit Conference Zurich. And now we are in the afternoon, and we want to get an update from Alexander Scanlon, who's the Managing Director and CEO of Barton Gold. Alex, great to see you again here.
Thank you for having me.
Yeah, sure. Two factors you must be happy. First of all, the gold price, but secondly, also your share price. And I think it's 1 year ago we were talking, and your share price, as I looked it up, is 4 times up. So
something like that. Yeah.
Well done, I would say.
Yeah, thank you very much. Yeah.
So what happened? Because the last time we were talking about, you want to look for more property district-wide, then 1 mil, second mill. Maybe you can give us a little bit of an update here.
Yeah, so our strategy for the past 5 years has been to consolidate an entire historical gold district and then go about systematically scaling the potential of that in terms of the total mineralization, and then setting out a clear pathway to leverage our existing infrastructure to cheaply go into operations and then systematically self-fund that growth. And over the past 9 months in particular, 2 interesting things have happened. One, the gold price has started moving and people started paying attention. But that was really part of our strategy. We wanted to focus on essentially crafting the strategy during the past 4 years while nobody was really paying attention. As we know, people weren't that interested. But 2, many of these ideas that we had been working on in terms of the potential of our existing mill, the mineralization that's there, the large-scale potential of our second asset, the low cost of developing that second asset and a rapid payback, we've been able to demonstrate all of these through a series of studies over the past 6 to 9 months, and we made one of Australia's highest grade silver discoveries. So it just brought this enormous wave of awareness just at the right time. And then with the gold market becoming more buoyant, we have seen essentially a 5-fold move in our share price over the past 9 months. Most recently, this culminated in us being invited to join our version of the S&P 500. So it's the ASX All Ordinaries Index, which is also administered by S&P Global. And then quite recently, we welcomed Franklin Templeton to our register.
Nice.
They led a placement, they cornerstoned a placement for $15 million, actually at a premium to our share price when we settled it. So we've just done all of the work to sort of take all of this theory from the past 5 years, bring it down to the table, and essentially make it real. And that has just sort of really transformed our trajectory.
Fantastic. Super. Let's talk about production. How is it going there? What is also planned for next year?
So we have now started the definitive feasibility study to start production at our existing Central Gawler mill. So this facility is fully permitted. We have 300,000 ounces of gold next to that mill. That includes about 200,000 ounces of gold in existing open pit and underground mines. It also includes about 100,000 ounces of gold in historical tailings, and some of those are actually higher grade. So we're actually breaking the definitive feasibility study into a 2-phase study to reflect a 2-phase startup model. The idea here is there's a very big reward to commence operations, naturally. So we want to de-risk each step possible. And what we're going to look to do is restart that operation first in the first phase to process historical tailings. We have a higher grade tailings facility where we have tailings that grade between 0.5 to 1 gram gold with very simple metallurgy. So the first phase, we'll start reprocessing these materials, and the second phase, 1 year later, we'll start blending in high grade fresh rock material. And we have fresh rock anywhere from between 3 gram to 10 gram. So we could take a very simple step into operations and then start hard rock mining, start introducing, it's an additional risk, it's an additional complication. But the idea is to have a really simple step into operations and then go from, say, 20,000 ounces to 30,000 ounces to 40,000 ounces. And then in the background, we have now permitted and been building our second Tunkillia project. So when we turn that on, we go 20, 30, 40, 200,000 ounces per annum.
Wow.
So that is for us a production profile that starts about 12 months from now. We are looking to start this whole profile or start this growth pathway from the end of 2026.
And then probably it needs, 3 to 4 years maybe?
So yeah,
So
the idea is start production, for example, January 1st, 2027. And our stage 1 mill, our existing mill, is producing 2027, 2028, 2029. During 2028 and 2029, we'll be building that second major Tunkillia project. Now that's a $400 million investment, but it produces 120,000 ounces per annum. And it has a very fast payback profile. It pays back the whole development in the first year. It produces 200,000 ounces. So we can use a majority of credit for that. We can use the earnings that we're generating from our existing operation to pay for the equity component. So that allows us to essentially continue to just have that smooth production, well, smooth, and then it jumps because while we're producing 30 and then 40,000 ounces at stage one, we're building the stage two project.
Yeah, fantastic. No, and you have ongoing cash flow, which
Correct.
always helps.
Yeah.
That's for sure. I presume that you're also doing parallel then a lot of exploration.
We are. So now we obviously focused on exploration for the past several years. We've now created this sort of critical mass to support mill number one and mill number two. So this is where we now transition to what we might think of as our regional enhancement strategies, right? If you have existing infrastructure, the best thing that you can do is further leverage that with additional grade. So we learned this lesson with our Tunkillia project. So this is a 5 million ton per annum plant, produces 120,000 ounces per annum. But that first year, because it's higher grade, it produces 200,000 ounces at a cash cost of $650.
Whoa.
So there's a very important lesson about the economic torque to marginal grade that you can get from a high efficiency mill. So we actually just acquired a project called Wadena, and it's actually the fourth of the main historical gold assets and the only one that we didn't own. We just acquired that in August, and it's to the south of our Tunkillia mill. And it has two really interesting characteristics. The first is that it's right on the main highway. So very accessible for transport logistics.
Fantastic.
The second is that the preliminary metallurgical test work indicates that we can concentrate about 90% of the gold into 6% of the feed mass. So instead of building a whole new full-size cyanide leaching facility, we can take, for example, 600,000 tons and simply crush, grind, and float that material into 36,000 tons. And then we're just sending 100 tons per day in 2 trucks up the highway and tipping it into our mill. So we're thinking very much about how we essentially in the future further leverage or kind of supercharge the economics of these two pieces of infrastructure. In between the two mills, we have our historical Tarcoola project. Now, this was actually the site of high-grade gold, or the original home of high-grade gold in South Australia. It's where it had its gold rush. We spent a couple of years trying to decipher what created this sort of cluster of high-grade operations. There's 600 shallow high-grade gold workings on our mining lease. We found another structure 5 kilometers to the west that looked very similar. We drilled that in May of 2024, and in August of 2024, we announced a gold discovery. So this is something that we've talked about in the past. And it was interesting, but it wasn't surprising because we thought this looks analogous. What was very surprising was in March of this year, since we last met, we drilled our second main target there, 500 meters to the west, and we made one of Australia's highest grade silver discoveries. Crazy. So our discovery, well, the first drill hole returned an intersection of 6 meters at 4,747 gram per ton silver plus 13 grams gold. So this was all within 50 meters of surface.
Oh my goodness.
So it's quite a shock because this is an historical gold field, not an historical silver field. Silver of this nature is quite unusual in Australia, generally very unusual where we are. So we have found an identical feeder structure that seems to be doing something different, but something that's very exciting. We have now drilled that in all directions and extended it. We have just published soil assays that show that it likely grows. And we're waiting for some diamond drilling results to see if we can identify the structural controls so that we can try to trace out and extend the high-grade mineralization. But being high-grade gold and high-grade silver right between a gold and silver mill, this will likely also be a source of very attractive blending material to supercharge these economics.
Yeah, absolutely. And I mean, also it's absolutely possible to produce gold and silver then from the same processing, right?
Absolutely.
It's not rocket science.
Correct. Look, the Tunkillia project, and we talk about it as a gold project. Economically, it's a gold project, but we produce twice as much silver as we do gold in terms of metal content. So Tunkillia will produce about a 1 million ounces of gold, but 2 million ounces of silver. So it's actually a silver project with a high value gold credit. When we think about this Tolmer discovery, we have a gold zone and we have a silver zone. And it might be that we send material from the gold zone to our Challenger mill, which is mostly gold. and we send material from the silver zone to our Tunkelia mill, which is mostly silver.
Okay. Wow. That's really a lot. So that means if we go for your longer term vision, will you become then a producer not only 200,000 ounces, maybe 400,000 ounces of gold? Let's call it gold equivalent if you want.
Yeah, look, we I think generally speaking, unless we found a silver asset of very serious scale, we'll probably always be a vast majority of value as a gold producer in that region. But yes, what we have established is a platform that is now capable of supporting either further regional consolidation or growth through exploration. The mineralization that we have found, about 2.2 million ounces of gold, around 3 million ounces of silver, this is all contained on a very, very small proportion of the regional structures that we have on our ground. We've naturally focused on creating an economic base, but now we can start expanding out to say, well, we've got a 10-year project here. Can we turn it into a 20-year project or a 30-year project? Or if we find 5 million ounces of gold, do we actually now start increasing the amount of gold production and target 200,000 and 250,000 and 300,000 ounces? So there's a lot of potential. I think what's really important is we've set a foundation or a base, a very solid plan that we can develop very cheaply. And for want of a better word, we have an infrastructure monopoly. We are going to extend that infrastructure monopoly. And that gives us a lot of options to work with other people around us. And there are a number of other explorers around us to say, look, do you really want to explore for 25 years, or do you want to become a small scale producer and send that material to us and we can continue to build production?
Fantastic. Well, sounds like a great game plan, I would say.
Yeah.
You said you need, of course, some much more money to make this all happen. Do you see any, I wouldn't say problems, but how do you want to finance all those kind of things? You're coming from the capital market side also. So do you have already, let's say a team in place which says, hey, you know what, those 300-400 million, no problem. We get it done.
Yeah, so this is part of our staged development strategy. So if we think about where we start today with our stage one asset, our stage one mill is an existing fully permitted mill. So if we want to restart that mill, which we do, I suspect that we'll invest somewhere between 30 and $50 million Australian. So something like 20 to $40 million US. This is a very small amount of money to be able to make a transition into operations. But because it is also existing fully permitted infrastructure, it has significant credit value, credit security value. So we will be looking at using a material component of credit. We also have the ability to use things like stockpile financing or gold forward sales. So whatever amount of money that we require to start that, we would expect the equity component to be quite small. And then because this mill, takes us into operations, we were going to re-rate the equity profile, we re-rate the credit profile of the company, but we also start generating cash. The way that we model this, even on very conservative assumptions, during the next 3 years, we should be able to produce most or all of the equity required to develop our Tunkelia project. Because again, with that, we will use probably 60 to 70% credit, 30 to 40% equity, which means we might need 140 to 180 million Australian dollars in equity. And that's something that we can generate from our existing operations at our second mill or at our first mill. Yeah.
Fantastic. Super. So I would say the future looks bright. Gold and silver from Australia.
It does.
Make it happen because the world needs your stuff.
Absolutely. Yeah.
Super. Alexander, thank you very much. We wish you well. And as I said, make it happen.
Great. Thank you very much.
This was Alexander Scanlon, the CEO, Managing Director of Barton Gold. And you heard it. Things are really moving fantastic. We spoke just 1 year ago. The stock is approximately 4 or 5 times up. This is how fast it can go. And it's not only a function of a higher gold and silver price. No, the guys delivered. And that is always important. He kept his promises. They are doing it. They do a stage process for the production and go step by step and then finance out of the cash flow also. This is fantastic. This is how things should be done. So check out the company. Thanks for watching us and bye-bye from Zurich from Precious Metal Summit.